Good morning, everyone. Welcome to our Tuesday morning trading session. Hold on one second here. I'm going to get you my monitor so you can see what's going on. The markets just opened up, and with a rather substantial opening gap compared to where they left off. Just a moment here. My NinjaTrader is giving me a hard time. I seem to be having a little bit of trouble with my soybean chart. All right, let's take a look here what's going on, or what's been going on. You can see a little bit of a roller coaster. That might be a slight understatement. So the market made a big move lower, then an equally large move higher, and then faded lower again, and now it's just kind of stuck going sideways. This is going to look like a pretty substantial opening gap, though, to the market. Off of the open. So we'll see. We'll just let it sort itself out. You can see here on the hawk, we're getting a lot of yellow bar clusters. Oh, thanks, Jim. Jim's letting me know the advanced decline numbers are pretty lopsided. Only positive 789, negative 1769. So 900 and change to the downside at the moment. A lot of sideways action still, so we'll let that settle down. Crude oil is pretty quiet for the most part. Here's crude oil on our hawk scalper, and you can see we just printed a first micro macro cross signal around here, still taking a little bit of heat on the trade, but it does look like crude oil will head lower. Okay, we just printed a swing signal for crude. So here's our trend change signal. Come on back here. We're going to try a second push on this entry now. Now the second push entry simply allows the market to trip the order, show us the extent of the current bar, and now we'll re-enter on some renewed momentum. It's a good strategy for the Falcon especially, and sometimes on the Eagle. It's very useful when you have a market that seems to be lacking direction, as crude oil seems to be at the moment. You can see we're kind of waffling back and forth a little bit. So we'll set that back up on the shelf. Oh, darn it. Just as I was looking away, we got the move in the move here in the Eagle I was watching. We had the green bar sell. Hazards of a trade room moderator. So there we go. We had the nice setup here in the Eagle. We got the green bar sell signal. This bar here flips the ATR over, so I would use that as my signal bar, which you can see it was also challenging the trend line. I probably would have covered at least to there, maybe to there, and we're just kissing our profit target. Darn it. I was looking out for that one too. Oh well. Richard's asking, Eric, when you say opening gap, are you referring to the close yesterday or another time? Yes, I'm referring to the daily pit session close. Obviously on the 24-hour charts there are no gaps, and I do leave mine set at 24 hours, but the market closed, where did they leave off yesterday? Somewhere around here, around 45.25, give or take. So this was the closing price, and then they opened down here. So this is going to look like an opening gap. Now when you get the really big opening gaps, it's difficult to determine whether the market's going to want to fill that gap or whether that's what they call an acceleration gap. An acceleration gap normally sees the market just continue in the direction that the market has gapped. A smaller gap is almost always filled. So if you see a smaller gap off of the open, let's say this is where the market closed, and this is where the market opened, and let's say it was a smaller gap, the odds are the market will try to get into that gap before very likely resuming the trend that caused the gap. But the big ones, and it's subjective, unfortunately, I can't give you any parameters, but if it looks big, it probably is a big one. But the big ones, they're more difficult to get a handle on. And as is often the case, once the market hits our high probability target, you start to see it reverse, or at least a little bit, not necessarily full-on reversal, but maybe profit-taking reversal of sort. Oh, and we just had a late filter entry signal here also on the Falcon, the market is moving very fast. Oh, you guys, you're not allowing me to show anything. I was going to show you the second push entry on this late filter signal. So we had this bar here which was hesitating. So you would enter below the low of that bar, cover above these highs. The nice thing about the late filter entry is that you can cover the trade a little bit tighter. Same thing with the second push on the entry. It allows you to cover the trade a little bit more aggressively. All right, well, we're going to be on hold here for just a little bit. Oh, Michelle is asking about the green bar sell. Where did you see the last green bar sell? Oh, I see what you're getting at, Michelle. Michelle's saying that warning dot didn't produce over the green bar. No, you're absolutely correct. So this was a with trend signal. Thank you for that correction, Michelle. The green bar sell actually occurred right here. Sorry, my eyes were playing tricks on me. The green bar sell should have had the warning dot above the green bar. So the signal itself was a with trend signal. We did have a green bar sell here. We also had a green bar sell here. But this signal that caused the market to move lower was actually a with trend signal. So sorry for the confusion. Green bar just prior to it mixed me up. Oh, nicely done. Jim already bagged 50 ticks on the YM on that big decline. Well done, Jim. Good job. Okay, it looks like we got maybe a little bit of profit taking going on now. We'll just wait them out. Looks like I broke my soybean chart this morning. Sometimes when I try to do something simultaneously with the screen sharing software and my NinjaTrader, my NinjaTrader suffers for it. So we're just watching the NQ and crude oil at the moment. And crude oil almost to our profit objective on our Falcon trade. Well, sorry, not profit objective, almost to the break even. So let's bring that over here for a second. So a nice little progression lower, and starting to see the buyers firm it up a little bit. We'll see whether or not we can at least get to our break even stop. Otherwise, if I start printing green bars here, I'll probably force it to break even. We will see. Okay, we're back to the overnight lows, well, more or less. As you can see here on the Eagle, this is where the market bottomed out. And we're just hovering above that. Oh man, what did I do now? Oh dear, I think I really did something. My poor computer. All right, we'll shoot a trend line there, and we'll throw another trend line up here just for kicks. Almost have a double pullback in our Raptor. So we've got the one pullback into the hard edge. When we encounter the hard edge, we always anticipate some sort of reaction. So with the Raptor, it tends to be that the second reaction gives us the follow through. So here's reactionary move number one, right? So here's hitting the hard edge. Reactionary move number one, hitting the hard edge again. And now we'll see if this is reactionary move number two. And I may just punch in a sell signal if we print. Okay, and let's see whether it breaks. And it did. So I'm going to hold my stop back a little bit more. Throw it above the swing high. We're flirting with the lows, of course. So we're going to anticipate a little bit of buying here. I suppose in hindsight, I could have offered up a couple extra ticks, you see right here, and gone in below the low. That would be the safer entry. I just like using the buy and sell market buttons. All right, let's see what happens when the market trips here on the low. So it looks like we need somebody to go 44.87, and there we go. So the buyers folded up like a cheap suit, hit our break-even trigger. Oh, and now they're going to tag us at break-even. Doggone it. All right, I might have to expand that break-even trigger a little bit. We'll see. And make a note in my journal right now and see whether or not that was a good plan to go with the break-even stop or not. Or perhaps I should have stayed. With the ATR. All right, well, we'll come back to that. Oh, great question here from Michael. Well, before I get to Michael's question, Michael's asking, I've never made a trading journal. What do you include? Michael, you're going to be very glad you asked that. And Ricardo, before we get to Michael's question, we'll deal with Ricardo's question. Ricardo asked, Eric, what are your Raptor settings? Your cloud looks a little bit different than mine. I've been playing with the Raptor settings a little bit, Ricardo. And the nice thing about the Raptor is it does enable you to adjust a little bit more than some of the other DTS tools. So with the Raptor, what I've done is I've sped up the cloud. It's an 8-tick cloud. Or pardon me, yes, the cloud is 8 ticks. And the filter, I've sped up to 10. Now yours are probably 12. And they're probably fine at that. I sped them up a little bit because I was getting these types of things where I was printing a signal, like right here, we're printing a full-on sell signal. The signal has very good follow-through, but for whatever reason, my cloud or filter were not syncing up. So if it happens once in a while, it's just an anomaly. But if it continues to happen, then I started playing with the settings a little bit. And all I did was speed up the settings a couple ticks at a time until I was getting everything lining up the way it was supposed to. So once again, you're just looking for signals that have decent follow-through, and you're wanting everything to be in sync. Like here's a great signal right here, but if this one had not been in sync across the board, I would have hesitated to take it, and yet look at how that played out. So I'm still experimenting with the settings a little bit, but that's what I've done with mine. I've sped them up just a little. It shouldn't really matter, so don't concern yourself too much if you're going with the default settings. It shouldn't matter that much whether the band and the cloud are just a couple ticks different. Yeah, Jim's asking, sounds like the break-even stop has hurt you more than helped. The last couple of days, it's certainly been that way. And Jim's asking, do you have the data to support it? No, I'm still compiling. This time it looked like it did keep me out of a potentially bad trade, although I was running the swing strategy. Let's see where the swing is. So my stops would still be up there. I'd be looking for the sellers to come back. Of course, there are no absolutes in trading. The nice thing about running a break-even trigger is that, well, obviously it gets the trade to break even faster. It lowers your or increases your winning probabilities, lowers your losses, obviously. The downside with running a break-even trigger is that if the market is hesitating a little bit, you're going to end up stopping yourself out sometimes on some profitable trades, which is what I ended up doing yesterday, which was just a little bit annoying. Okay, but today it looks like that break-even trigger may have been pretty helpful. Okay, let's get to Michael's question. Michael's asking about trading journals. Now, there's a lot of different trading journals. There's a lot of ways that you can journal. There's a great website called Trader View. That's with a spelled Trader VUE. And Adam actually has a piece of software where it will import your trades directly into Trader View. So it will track your trades for you. I much prefer and recommend that you journal by physically writing your trades down. And your journal does not have to be anything fancy. You can see here this is a snapshot of my journal from a couple years ago. I should actually scan a more recent page. And I hope that's coming through because I think, there we go, my screen sharing software, I really did something to my poor computer today. But you're going to develop your own little shorthand. And what you're going to do is you're going to record the trade parameters. I record the time, I record the position, I record the bird that I used, E for eagle, H for hawk, F for falcon. I record the instrument I'm trading, how many contracts, my entry price, my stop loss. Now I actually record my profit objective also. So I have, a couple years ago, I was only recording the pertinent information. Now I record all three parameters. I record how the trade worked out. And now you get to the important part, because this stuff up here, your NinjaTrader will do for you. But this stuff up here is not the important part. The important part is right here. This is your reasoning for taking the trade. And I'm a big proponent of always having two reasons for taking a trade. So in this case, it was the first signal. I had the head and shoulders top. And then when the trade works out or doesn't work out, what did you learn about it? And normally I highlight it with a star, especially if it's something very important. So here, this worked out to be a loser, but I recognize that I got in too early and there was no trend developed yet. You'll notice the time, 6:42, that's Pacific time, of course. My least favorite time of the day to trade. How did I come to that knowledge? Well, I had several losing trades at quarter to the hour. 6:46, I bought the Hawk, the YM, 2 contracts, my stop loss, another loss. It was the first micro-macro cross. It looked like it was on a retrace and crude oil was up. A lot of times the stock market and crude oil will have a loose relationship. So if crude oil is heading higher, I would have expected the stock market to also head higher. But what did I learn about that? There was a downtrend. So I should have been a little bit more suspicious of the uptrend, maybe gone in with a single contract. 6:49, I bought the Falcon. on the NASDAQ, 3 contracts, I made a $300 profit. It was the first signal off of the second push entry. So you see, this is how you start to develop these types of things. This is how you get confidence in the signals. 707, I sold the Hawk, the NASDAQ, 2 contracts, I made a $100 profit. It was the first micro macro cross off of a failed buy in a downtrend. At the same time, I also sold 2 contracts on the YM, also with a $100 profit. Also, first micro macro cross failed by downtrend. So even though this journal entry was from a couple of years ago, I can still tell you exactly what was going on at the time I took the trade. If you do that for 2 weeks, it doesn't have to be anything fancy. You can see I just use a spiral notebook. If you have a loose leaf binder or whatever, if you write your trades down for 2 weeks, I guarantee that you will see results. You will start to see patterns emerge in your trading. You're going to start to see things that you are good at and things that maybe you are not so good at. So if you can commit to it for 2 weeks, I think you will be very pleased with the results. And it's not difficult to do. It's more just an effort thing. It costs next to nothing, a couple bucks for a spiral notebook and a little bit of effort to write the journal entries down. I do believe, though, that something happens when you physically write your journal down. When I work with people and I ask them for their trading journal, this is what they usually send me off a NinjaTrader. It's like, that's not your trading journal. That's your account performance. But that doesn't tell me why you decided to take a trade. Joe says the Russell is seesawing. I'm not surprised. Things looking a little stronger at the moment. Jim says the bank index very strong now. So we'll see whether or not that pulls the rest of the stock indices higher. Okay, we just had a couple signals trip here. We had a first micro macro cross signal here on the Hawk, and I know you're looking at this saying, Eric, that's not a first micro macro cross. The micro line and macro line never crossed over. Well, close enough. The filter did not go out of sync here, so I suppose technically it's not a full-on first micro macro cross. But with the first micro macro cross signal, it's not just the crossing of the trend lines that we're looking for. We're looking for a market that goes out of sync and then comes back into sync. So normally, the best scenarios, we like to see the trend lines go out of sync, the bars go out of sync, and the filter go out of sync. This one we got the trend lines and the bars, the filter held in, but you can see it still worked out. I suppose you could see that as a 4-arrow consolidation. In fact, it is a 4-arrow consolidation right here off the yellow bar. I missed that because the 4-arrow consolidation is such a powerful signal. I will take it even off of yellow bars on the hawk. In fact, it's the only signal I will take off of yellow bars on the hawk. That's how strong it is. So we had 1, 2, 3, 4 signals, and that fourth signal is the one that's going to go. And there we are. I was also going to point out the buy signal that we were printing here in the Raptor, which was our trend change signal. And we had a little bit of the test of the extreme going on right here. Not very deep, but still enough to look like there was a semi-serious effort. We broke this little swing high here. So remember, whenever you're breaking a significant swing point, we normally expect 2 moves in the direction of the breakout. So there's move number 1, and this now is move number 2. This sort of thing happens time and again. So if you have a significant swing point, let's say right down here, this one looks pretty significant. Okay, so there's move number 1. The market comes back with a sell signal. We can have a little bit more confidence trying to short this, in that we should see some sort of move lower. Taken some heat, but finally tailed off a little bit. The first 2 moves tend to be the largest. Could have even adjusted it to there. The result is the same. This was move 1, and then this was move 2. So just a little something to keep in the back of your mind when you're trying to figure out whether or not you should get on board that signal. Plus, you've no doubt noticed that we had this channel type thing going on here in the Eagle. So there was a little bit of an opportunity for the market to rally up here. We've made 2 counter trend signals. We've broken out of this channel. This is all starting to look a little bit more bullish to me. Regarding journaling, Mark writes, I'll back you up on that. Since May 8th, I've been journaling for the first time, and as of today, I'm up over $4,100 by keeping track of my winning trades and what went well and my losers on what didn't. The journaling was cumbersome at first, and now I look forward to it as a habit. If you treat it as a business, as I do, journaling is a must. Absolutely. Well said, Mark. Oh no. Joe says, I need the Trailblazer. It was not quick enough. Now the Russell's gone on without me. Hoping for a pullback. I'm sure we'll see one here. I'm not sure the market's fully committed to a direction this morning. It started off heading lower. Now it's trying to head higher. I wonder if they're going to try to get into that gap after all. All right, so we do have a late filter entry signal here on the Falcon, which we know tends to be, oh, you son of a gun, which we know tends to be a high probability signal. Let's see if we can still get a, oh no, they're going to go now. Doggone it. All right. I was going to point out the pros and cons of using the different stops, the different swing lows for your stops. The late filter entry signal being a pretty reliable signal, it may not be as necessary to go through the deeper stop, although the deeper stop is always safer. We just hit our high probability target there. Yes, I'm a touch annoyed at that. Wow, the NQ firing signals across the board here. We also got a signal, a macro pullback signal here on the Hawk. Again, a high probability signal. And this too developed into a 4-arrow consolidation. 1, 2, 3, 4. Look at that. 1, 2, 3, 4 signals. And once again, it goes off of the 4th signal. Jim says the advanced decline a little bit evened out a little bit. It's now only about negative 400, 500, somewhere in there. Jim says he's watching the YM, and let's see if I can get the YM up here. My charts are, no, I'm sorry. I broke my charts this morning. He says yesterday's low is today's high on the YM. So the market's doing one of these where it breaks down, comes back, and retests it. Normally we expect the market to fail or to honor this support area and fail and head lower. It's essentially a short-term testing of the extreme. You can also look at, see if you look at this chart the way it is, see how we're making a pretty big downtrend? This may look a little bit like a bear flag, this tight little advancing channel that we have. Those of you who like your Elliott waves might see that as a ABC correction, or 1, 2, 3, 4, 5, 1, 2, 3. Yeah, maybe it's setting up for a reversal. Problem with the Elliott waves is they're much easier to read in hindsight. Michael's asking, how close do the arrows need to be a 4-arrow consolidation? Michael's just full of good questions. Oh, and Michael, I have a feeling you may not have the cheat sheet yet, so please feel free to write me for the cheat sheet. It will help you with your hawk trades. This is the cheat sheet here. And all it does is help you identify the higher probability signals that we're looking for. And this is for the Hawk. Phil was good enough to put one together for the Falcon. I haven't done one for the Eagle or the Raptor yet. My apologies. I'll send you my email address. If anybody would like that, you can email me. There you go. Okay, so the question was, how close do the arrows need to be in a 4-arrow consolidation? Well, the clue to that answer is in the phrase consolidation. A 4-arrow consolidation really is nothing more than a bull flag or bear flag. Now, a bull flag occurs in an uptrending market. You get this little retracement period, and then the market continues in the direction of the trend. A bear flag does just the opposite. You have a market heading lower, you get this little consolidation pattern, and then you get the market continuing with the trend. It's during this consolidation period that we look for the arrows. And likewise with the downtrend, it seems to develop something like this. Okay, so the closeness of the arrows, they're going to be relatively close, but sometimes, as you can tell from that chart that I just showed you with the cheat sheet on it, we actually had this type of scenario where the market went up and then went more sideways before continuing higher. So that's an alternative for the 4-arrow consolidation also, where you're going to get 4 signals moving sideways. But it's definitely going to be a consolidation pattern. It tends to occur after the first micro-macro cross signal. In this instance, it actually encompassed the first micro-macro cross. That's why I say if we haven't had a proper testing of the extreme, right, and the test of the extreme shows us that in this case, the sellers are losing control, right? Sellers have control. The buyers rally the market up. They break a significant swing high. Everything is looking more bullish here. We're printing a first micro-macro cross signal. I would be interested in buying this signal. The problem is, where do I put my stop? Right? I haven't seen a test of the extreme yet. I haven't seen the sellers try to recover the market. How do I know the sellers are going to try to recover the market? Well, look at how the sellers forced the market down here. They moved the market a long way. They're just not going to walk away from that just because the bulls gave them a little bit of a push, right? So I'm fully expecting the sellers to come back and give me a test of the extreme. So I'm going to end up covering this trade fairly deep. If I'm at a loss, if I can't cover below here, I will normally gravitate toward the macro line and where the macro line turns. So I would probably set up a trade something like this. So here the market engages our order, and now comes the retracement. All right, and it actually develops into a macro pullback signal, which would, if I wasn't already long, I would get long from the macro pullback. If you'd like to add to your positions, that's probably as good a place as any to add to your position. And now, by now I'm starting to realize, okay, I'm in a consolidation pattern. I'm going to hold out for the 4-arrow consolidation. So now comes the 4th arrow. I'm starting to breathe a little bit easier. If I'm already in this trade, my stops are now going underneath here. Once this signal trips, why? Well, because the buyers have shown me that now they're getting ready to go. If the buyers fail at this point and the market starts doing one of these and hits my stop, it's probably going to keep going until it finds this stop also. So I may as well take my lumps a little bit early and recognize that I'm on the wrong side of the trade. Now, something else that you could have done with this first micro macro cross, remember your hash mark is only a suggested entry. Now this one, you can see the high of the bar next to it is about halfway to my profit objective. So in all honesty, I probably would have taken it on the hash mark. However, sometimes the signal is going to print, and we're pretending here now, folks, where the signal is going to print and it's only another tick or two to enter above the high instead of the hash mark. In that case, I'll enter above the high. By doing so, it makes it a little bit easier to cover the trade. I could probably use my stop strategy to cover the trade in this case. Why? Well, because I'm making the market prove itself a little bit extra. It's the same logic as I use for the second push entry, right? I'm looking for renewed momentum. I know the current limit of the market is right here. I'm making the market, proving the market a little bit more. Therefore, if it engages me on this next breakout, it's probably going to carry enough momentum that I can run my stop a little bit tighter. Of course, if you don't feel good about it, you can dial down the risk amount, right? That's always easy. Or you can still run a slightly deeper stop. In my book, there's never anything wrong with running a deeper stop. The difference here, though, is that you would not have been engaged on this order. So now you can wait for the next signal and you can say, oh, okay, look, macro pullback. Oh, look, 4-arrow consolidation. And now I'm starting to get a little bit more interested, and I can take it off the 4-arrow consolidation. I can actually frame my trade like this. Why frame it tighter? Well, once again, the buyers have shown that they're now ready to push the market higher. How do I know that? Well, because this was the buyer's effort, right? This was the seller's effort. This was the buyer's effort. This is the best the sellers could do before the buyers said, okay, we're gonna take this back. We're coming in heavy now. And then they continued to rally from there. Oops. Same thing with this one. This one also developed into a 4-arrow consolidation and was also very much a bull flag. Now you see how we're printing all these macro pullback signals. That's not a good sign. Normally we only see 2 macro pullbacks within a trend. And here we have 1, 2, 3, 4. So as we're printing more and more macro pullback signals, I'm becoming more and more suspicious. Yeah, and Jim says there was also trend line support on those macro pullbacks, which is true. There you go. Or the macro pullbacks and the 4-arrow consolidations, which would also give you a little bit of added confidence. Oh, look at that. They're not ready to give it up just yet. So we'll see if they fail now on the high. That will be our test of the extreme, right? Assuming they're heading lower. And then what will we be on the lookout for, class? Well, we're going to look for them to take out the low. And then what? Well, there will be a little bit of a retest of sorts. Might be big, might be little. And then what? Well, we've broken the significant swing low. This is move number 1. We know there's going to be move number 2 lower. So we're going to look for a signal somewhere around here. This will be our high probability signal, because all the pieces of the puzzle will be in place. Sure, there's guys up here selling right now. They're selling it lights out, but it's a bit of a gamble. It might head lower. They might get run over and the market might head higher. There's no way to really know. So if you're the gambling type, go ahead. That might be a good place for you to entry. But if you're a trader, you're going to wait for that higher probability situation. Now, if it breaks through the high and runs over all the sellers, well, we're going to see the same thing. We're going to see the sellers push back somewhere. And we're going to see, there they go. We're going to see the sellers push here someplace. And now we're coming in with our first micro-macro cross. So you see now we're in this segment right here. Now we're looking for our opportunity to go long. So here's our first micro-macro cross signal. Same thing though, we haven't really had a test of the extreme, have we? So I want to be a little bit more cautious on this trade. So I can tell from my logic counter that's where my hash mark is going to print. But if I get brought in on this trade, I'm going to have to sweat the trade all the way down here. Why? Because that's the place where the buyers dug in before. Quite honestly, I would like nothing better than for this trade to go into yellow bars. Okay, I could adjust my trade somewhat. There is going to be another little push higher here, and the lower we go, okay. So now we've moved into yellow bars. I'm going to scrub the trade because we're starting to drift a little bit. You see, this whole test retest thing that we were looking for should have come a little bit sooner, should have come somewhere around this resistance area, and then allow the market to go like that. Now, what are we doing? Well, we're printing a red bar buy. Now, the red bar buy can be used as a counter trend signal, but you see, the deeper we drift, the more active the buyers are going to become. And this is actually a signal that I should dial down the risk amount on also, but we'll just leave it as it is right now. All right, so here's our, oh, and they slipped us a tick too, stinkers. Now remember, red bar buys, green bar sells, they tend to occur near the end of the trend. So that's why I say you can always trade them as a failure. You don't need to trade them on the trend side. As you saw in the cheat sheet, that very often we can set up to sell them down here. They will almost always develop into a first micro macro cross if the trend is changing. So we'll give them a minute here. We'll see whether the buyers can muster one more push to test the extreme. I'd hate to think that this little 2-3 bar rally is all that the buyers can put in right now. Jim's saying, how about you shoot a trend line across the bottom there? All right, let's do that. Yeah, not too bad. Just breaching the trend line ever so slightly. but no doubt there are buyers watching this trend line and are buying off of the trend line. Okay, that's a little better. We've got a little bit more buying support coming in now. So we've got one bar with a pretty substantial tail. If this bar turns or completes higher, I'm definitely rolling my stop up there. In fact, I'm thinking about doing it right now. Let's go with the bar high-low. We'll go off the low. There we go. We'll press the trade now. Come on, get up there. Yeah. Jim's asking, would that be a heads up for a change in direction? It did breach the trend line. Yes, very much so, Jim. I tend to be not one to adjust my trend lines. I think there's a lot to be learned. So if you shoot the trend line off the first two pivots and you come up here, well, actually, I drew it a little better this time. But when it starts breaking the trend line, then yes, I'm starting to think that the market is falling apart. Same reason I like to put a trend line on the other side of the market. Because you see, you can see very quickly how the market is starting to shallow up. See, it couldn't make the trend line there. Now, if it breaks the trend line just by a tick or two, I don't really consider that a breach. However, you're going to find times where the market makes a significant breach of the trend line. Let's see, where does this one fall? Okay, well, here too, you can see it started coming up very short. Okay, I'm just going to do this for illustration purposes. This isn't really what a good situation, but let's say we had a trend line drawn like this. We don't really, I'm just showing you. So you see how the trend line or how the market breached the trend line here? When you get this kind of situation, it's referred to as an overshoot. It's actually, in this case, it's not bearish at all. It's actually very bullish. You wouldn't think so. You would think the market's got lots of momentum to breach the trend line like this. It must be strong to the downside. No, in actual fact, it's probably gaining strength to the upside. So when you see that type of thing happen, when you see those types of overshoots happen, you can start to think, oh, maybe the market's going to reverse. It doesn't always reverse immediately, but it will tend to flounder a little bit and then start to go the other way. This I would not consider an overshoot. You know, one or two ticks, that's not a real overshoot. If it made a, got up here and then went back into it, yeah, that I would consider an overshoot. But you can see we're starting to get a little bit shallow on the peaks. We're coming up short. We're starting to make a little bit more significant break to the downside. If you were inclined to sell this red bar buy, you could also use this current bar as a place to short it below. The nice thing about doing the red bar buy or selling the failure of the red bar buy, the nice thing about that is that you've got a great place to put your stop. put your stop above the swing high, which in most cases is not too far away, and you will know without a doubt whether or not you are on the right side or wrong side of the trade. There will be no second guessing, oh, was my stop too tight? Could I use a better stop strategy? No, if the market fails here on the lows and then trades back above the current high, no, you can be sure you are on the wrong side of the trade. Randy's asking, can I get a link to today's recording? Yes, Randy. It usually takes a couple of days to get the videos up and running. The webmaster, she's been dodging tornadoes down. I'm sorry, I shouldn't laugh. She's been dodging tornadoes down in Oklahoma, so her service has been interrupted, to say the least. But Indicator Warehouse does have a channel on YouTube. So if you go to YouTube and you search Indicator Warehouse on the channels, you'll find all the daily videos. So just make a note, June 2nd is the video that you're going to want to find. Okay, so a big run up there. So the buyer's obviously not done yet. And that was this red bar buy signal, which I may have been just a little bit too tight on my stop on. Yeah, Mark says you may have moved your stop too soon. I think you're right, Mark. If, speaking of journaling and learning stuff about yourself, if there's one thing I know that I do wrong, it's that I can't help myself sometimes tweaking a trade. And, well, you guys have seen it here before too. Sometimes I will tweak myself out of a perfectly good trade. Yes, absolutely right. Mark says, win some, lose some, but that's what the journal is good at telling you. Yes, absolutely it is. Okay, we're at the bottom of the hour, which is usually the time that we see a reversal against the dominant trend. If there's been one, I don't know. We've had uptrends, we've had downtrends, and now we're in uptrends again. Oh, see, here on the Eagle, I would have considered this an overshoot on the Eagle, and I think I might have mentioned that to you. The overshoot was confirmed when the market broke the trend line to the other side. Why is this an overshoot on the Eagle and not an overshoot on the Hawk? It's simply a matter of recognizing that the bars on the Eagle are much larger, so this is a much more significant breach than it would have been on the Hawk. And like I said, it was confirmed when the market breached here on the upside also. Now we can reverse the process. And once again, always go with the obvious stuff. You can't fine-tune your trading too much. And all we'd be looking for now is for the market to start to shallow up a little bit, perhaps break the trend line. If it's really active, it will overshoot it. But it does appear as though they're going to try to get into that overnight gap. Oh, wow, the advanced decline is even up. 1457 to the upside, 1423 to the downside. So that's that's pretty even, folks. Well, crude oil has kind of gone sideways after finally finding our profit target. Let's take a look at crude oil here on the Falcon. So it took a lot of humming and hawing, finally found our profit target, and now they're possibly working on a trend change signal to the upside, where we have our up portion, we might get the down, and then perhaps an up again. Inventory is tomorrow, Wednesday, so they may drag their feet a little bit going into inventory report. We'll see. Which reminds me, tomorrow's room will be the open house room, right? This room that we normally meet at will not be open tomorrow. So please join me at the open house room, the public trading room. All right, well, we're just kind of watching and waiting now. You know, the NQ's been giving, actually the stock indices in general have been giving their moves early, haven't they? It's almost as though, well, it's worth getting up early just so that you can catch that first move. It wasn't always this way. But I suppose that's true of any market. They're always changing a little bit. They are plodding along a little bit higher. Oh, I guess we did have a first micro-macro cross signal here. What in the world was I looking at? Well, they're kind of slowing somewhat. I think we are going to see a little bit of a rally for the rest of the morning if we can get another signal here. Oh, good for you, Mark. Mark says, I've changed the way I've started trading and I've been getting profits within the 2 hours before the market usually opens. Yeah, sometimes there's some reports that come out just pre-market that will actually spur the market a little higher or lower. It says I usually hit my goal for the day by an hour or less after the market opens, and then he's done. Good job. And Jim says he's long the Dow Jones puts are long up here, kind of a toe in the water type trade. I would agree with that. What I'm kind of holding out for, we saw this first micro macro cross here. I'd rather see a macro pullback, and we might be getting that. That might give us a little bit more room. I don't know. It's a funny kind of day today. They're kind of settled in. They're more or less happy where they are. All right, getting a little warmer, getting closer to that macro pullback signal. All right. It's not the best looking trade, and things are getting a whole lot slower, but we are getting a macro pullback type trade here. In fact, what I'm going to do is I'm going to dial down the risk amount somewhat. It's a little bit more of a flyer. Let's see if I can't get a second contract in here. Nope. And now we're into yellow bars, so we can cancel that. This might also build into a 4-arrow consolidation. If it builds into a red bar buy, though, I'm probably going to think about selling it. Yeah, James is a more aggressive trader. Jim's saying, you know, Eric, you can try to buy the limit on the trend line. Now, this is what a lot of traders will do, is they will set a limit order here near the trend line and maybe risk a few ticks and try to pick up the market as it bounces off of the trend line. And it's not a bad strategy. We haven't had a test of the extreme here yet. We're very likely to see some sort of bounce. It is, you know, you're essentially trying to duplicate this scenario right here. So you see traders doing this all the time. If they can shoot a channel like this is why these channels hold too. They'll sell it here, they'll buy it here. They'll sell it here, they'll buy it here. You can see the sellers are getting a little bit more aggressive. They're coming up a little bit earlier and trying to sell it a little earlier. And now will the buyers do it as well? It's not a strategy that I normally employ. It's not that it's a bad strategy, far from it, but it's not something that suits my personality as a trader. We'll throw it on here just because there's not much going on. So what I've done is I've done a limit order, and we're going to buy on a limit if the market trades below these lows. We're going to look if we can't buy it up a little bit. Yeah, like Jim says, a lot of support at the trend line and below a nice stop area. Yeah, you're absolutely right. For me personally, I feel better when I can make the market prove me right. So these are yellow bars. I'm not going to take the signal, but I would much prefer to buy on a breakout higher. That shows me that there's some momentum, there's some participation. But that's me. That's, you know, um, what suits my personality. Somebody like Jim obviously is comfortable buying on a limit. And there's a lot of people that will do that also. We'll see how this comes together here. All right, so there's the limit. We are working, getting the warning dots for a possible red bar buy. And we'll see whether or not we can get a little snap to the upside here. Okay, well there's the downside of trying to buy on a limit. All right, so getting the makings of a first micro macro cross on the hawk. Not everything is in sync yet. All right, first micro macro cross is coming into sync now. It's a little bit early. We don't have that test of the extreme, so a little bit problematic in knowing where to cover the trade. I'm going to take the swing here in the micro line as a place to possibly, oops, wrong order. You got to remember to go back to your correct order type. I still had the limit order on there. Oh, and now we're into yellow bars, so I got to scrub that anyways. Oh dear. Come on. So the Falcon 2 working on a trend change signal. So we've got the down, here's the up. We'll see if it comes back with a down. That could be a sellable signal. Jim says he's looking for the yellow bar buy sell. So looking for a buy signal to print here, followed by a failure and a sell signal. All right, are they going to give it a go here on the Falcon? Once again, we're getting into that. You can tell by how slow the market is that, it might be prudent to dial down the risk amount. The hash mark's going to print right here. Maybe I'll give it an extra tick or two, enter below the swing low. I should probably try to cover that a little bit higher, maybe above the trend line. We have our first micro-macro cross signal, which is also turned into yellow bars. So that's a no-go. And now we are coming back with a possible early trend change signal on the Falcon and an itty-bitty double pullback here on the Raptor. So are we actually going to see a rally out of this? Jim says the advanced decline still in a dead lock, and you can tell our Geiger counter here also very flat. Oh, look at this. Okay, there's the buy signal. And now what I'm doing is I'm just using this bar here as my signal bar. Took a little slip on it, not quite what I was looking for. close that order. So we also had an early trend change signal here on the Falcon, working on a proper trend change signal now. So there's bound to be a little bit of a reaction here before possibly another push higher. Jim's asking how many ticks from the hash mark to the top. Let's see, the top is, well, we'll say 4517 to 4710, so that's about 28 ticks, 27 ticks to be precise. Okay, come on, buyers, don't give it up just yet. Oh yeah, a lot of yellow bars coming in here. Well, you know, it was a bit of a crapshoot type trade. well, this trade might be folding over a little bit. It's hard to tell. Everything has slowed down so much. I think we're going to close up the room a couple minutes early. Remember, tomorrow's room is going to be the open house room. And if you are trading this afternoon, I don't know. I could still see the market trying to get into that gap. In other words, we might see the market head higher. However, if this test of the extreme right here that we're seeing holds, this one right here, if we see that hold, I think we're going to see a first micro macro cross and maybe a little bit of a dip lower. All right, you guys, have yourselves a wonderful rest of the day. I will see you tomorrow morning. Bye for now.